So we continue with case scenario number 21. Charitable Trust is registered under section 12AB. So if it is a 12AB charitable trust, their charitable activities are exempt. The trust conducted a 3-day residential yoga camp among people on International Yoga Day for the advancement of yoga. Advancement of yoga is a charitable activity that is exempt and charged 7,500 per person inclusive of stay and food. Is a consideration relevant here for you to consider if it is exempt or not? No. There was no any limit of consideration here, correct? We just said if advancement of yoga is a charitable activity, if the trust is registered under 12AB and if it is doing the charitable activity, then yes, it is exempt. So advancement of yoga, no matter what the consideration is, it is exempted. The trust also conducted programs for the advancement of education. Advancement of education is exempt when it is for above 65 years in the question they have given metro cities. In this case study, it's metro cities. But when is it exempt? It is exempt only when it is in rural areas. A nominal fee was charged for the same. So this will be taxable. A trust received the following donation during the month of September. Mr. Sunil Sharma, proprietor of Solid Steel, donated an RO water plant to the trust costing 75,000 and displayed his firm name in the RO system installed at the premises of the trust as donated by Mr. Sunil, owner of Solid Steels, trusted by all. Clearly an advertisement. It's very obvious from it, isn't it? It's clearly a form for him to advertise his firm. So it's not in the nature of a philanthropic activity. So no, it is not exempt, it is taxable. Mr. Prasanna, a lawyer, donated chairs to the trust costing 25,000 and Love All is printed on all chairs donated by him to the trust. Now this is exempt. Yes, this is purely with a philanthropic intention. There is no intention of any advertisement here. Charitable Trust also owns and manages a Gurudwara. It rented the community hall. Renting of community hall is exempt when it is less than 10,000 per day. Here it is for a rent of 8,500 per day for a marriage function. Is it exempt? Yes, it is exempt. It also rented the commercial shop located in the precincts of the Gurudwara for a rent of 10,000 per month per shop. For commercial shop, when was it exempt? If it was less than 10,000 per month. If it is exactly 10,000 per month or exactly 10,000 per day when it comes to community hall and marriage halls, it will be taxable. Okay, this is a point that is constantly tested in all attempts across inter and final levels also. So please pay attention to this. Exact 10,000 is always taxable when it comes to commercial shop rent and community halls rent. So here community hall 8,500 is exempt. 10,000 per month commercial shop, it is taxable. It is not exempt, it is taxable. Alright. You can assume the trust is registered under GST. Everything is intrastate. ITC conditions are all fulfilled. Now, first question. Which of the following activities conducted by the trust is exempt from GST? Advancement of yoga, we saw it is exempt. Education, but since it was in metro cities, it is taxable. It is not exempt. Then both A and B, neither of the activities. Your correct answer is option A, advancement of yoga. Determine the value of taxable supply in respect of donations received by the trust. What are the donations that you received from the trust? One is Sunil Sharma 75,000, one is Prasanna 25,000. Which is taxable here? 75,000 is taxable, 25,000 is exempt. What was the question? Taxable. So 75,000 is taxable. The one where he displayed his firm name also. Which of the following statements is or are correct under GST law? See, always pay attention to this particular part of the question. Sometimes they will ask you what is incorrect. Sometimes they will ask you what is correct. So please pay attention. Don't read it in a hurry and just make mistakes. In respect of Gurudwara, renting of community hall, it was only 8,500, right? So it was exempt. Renting of community hall is exempt while renting of commercial shop is taxable. Yes, option is B. This is your correct answer. The other things are wrong. Now we are moving to case scenario number 22, right? We're just done with 21. Now we are moving to case scenario number 22. Yes. Alright, so next is case scenario number 22. Vedanshi and Co., a partnership firm. Always pay attention to this part of the question, because if they are testing your questions on RCM, this particular information becomes a very important factor. Okay, a lot of us overlook this part of the question when we are reading it in a hurry. When we have time, we'll read it carefully, but when we don't have time, we are more likely to skip this part of the information. So please pay attention to this. All right, it is engaged in retail trade since 1st April. The firm became liable for registration on 1st October. However, it applied for registration on 10th October. It had inputs held in stock, semi finished, and finished goods. The firm was granted certificate of registration on 5th November. Your obvious question will be, what is your effective date of registration? Vedanshi and Co. needs to transport one consignment to the transporter and then to the consignee. So from consigner to the transporter, then from the transporter to the consignee. The distance within the same state between godown of the firm and the transporter is 20 kilometers, and from the place of transporter to the consignee is 99 kilometers respectively. Also, while filing return for the month of November, the firm generated each challan, not e-waybill. We are talking about each challan. When we are filing return for the month of November, the firm generated each challan on 5th December for making payment of GST through RTGS of their bank. Everything is intrastate. Conditions for ITC are fulfilled. Let's go to the question. Determine the effective date of registration. First question. Very obvious from the question. It's a very small case study. It's a very small case study. All right. So when did you become liable for registration? On 1st October. You need, if you apply within 30 days from the day you become liable, then your effective date is the date on which you become liable only. But if you apply with after 30 days from the date on which you become liable, then whenever you're being granted the registration, that will be your effective date of registration. So here within 30 days means within 31st October I need to apply. When did I apply it? On 10th October. So it is within 30 days. Yes. So what is the effective date of registration? 1st October. That'll be your first question. 1st October. 1st October, option B. Second one, Vedanshi and Co. is eligible to claim ITC in respect of inputs held in stock as on. You know, you can always, when it is a fresh registration, we've already seen, you can take the inputs held in stock as on the day immediately preceding the day on which is your effective date of registration. If your effective date of registration is 1st October, the date immediately preceding this day, which is 30th September. Yes. Whenever you have your effective date of registration, immediately preceding the day. That will be 30th September. That is option A. Here third and fourth question are, you can mark it as important because they are very unusual questions that you would find, but very simple ones. But people are students are more likely to overlook this part of the chapter. So please pay attention to this. This is important. Which of the following statement is true? I've already said before, make sure if they're asking is what is correct or what is incorrect. All right, sometimes they will ask what is the correct option, sometimes they will ask what is the incorrect option, so please pay attention. It is true. What is true? Which of the following statement is true is the question. In respect of furnishing of details of conveyance in part B of e-way. See, part B of e-way bill has to be filled in order for it to be valid, correct? Part A and part B both has to be filled. But there was one exception that we studied. Okay. Part B, even if it is not filled, it is still, e-way bill is still considered valid. What was that case? When the distance is up to 50 kilometers and it is within the same state. In our question, Vedanshi and Co. go down, then transporter. Yes, from the firm, from the consigner to the transporter, it is only 20 kilometers and it is within the same state. So even if you don't fill part B, you are fine. Yes, but between the transporter to the consignee, there are 99 kilometers even if it is in the same state. It is not valid if you don't fill the part B. You have to fill part B compulsorily. All right. Now, what was the options? Let's look at the options and decide. Part B need not be filed in respect of transport of consignment from go down to transporter. Is that correct? Yes. Because it was only 20 kilometers, right? Yeah, 20 kilometers and it was within the same state. So no need. Part B need not be filed in respect of transport of consignment from transporter to consignee. No, that was 99 kilometers. So you need to fill Part B. Information in Part B is neither required in, it is required in from transporter to the consignee's location. Information in Part B is mandatory in transport of consignment from go down to transporter and from transporter to consignee. No. For the first part, it's not required. So your correct answer is option A. Fourth question, determine the validity of each challan generated by Vedanshi and Co. for the payment of taxes. So when did they? Validity of each challan, we already saw that validity of each challan is for 15 days from the date of generation of challan. Yes. So this was on 5th December is when they generated it. Validity is for 15 days. So it will be on 20th December. Up to 20th December, it is valid. What is your option? You have 20th December. Fourth is option C. Alright, so we are done with case scenario 22 also. Alright, next is case scenario number 23. Shanky Consultants, a partnership firm registered in Delhi as regular taxpayer, renders the following services during the year. Security services 2 crore to registered business entities. When security services come into the question itself, you need to connect it to which chapter? Your charge chapter. It will be RCM question. Manpower services 5 lakh. Auditing services 1 crore. Other information, Shanky Consultants also paid sponsorship fees of 70,000 at seminar organized by Banarasi, okay, Banarasi Das Private Limited in Delhi. Shanky Consultants pays rent amounting to 6 lakh for a building owned by Municipal Corporation of Delhi. Assume all services are taxable at 18% and all transactions to be intrastate supplies. Very small question. Most probably all of your questions has to be about reverse charge. What is the aggregate turnover of Shanky Consultants? That's an easy question, no? Aggregate turnover means it has to be, see, security services to registered business entities. It is in RCM, yes, because Shanky Consultants is not a body corporate. If Shanky Consultants was a body corporate, then yes, it will be under FCM only. But this is Shanky Consultants is other than body corporate. They are providing security services to registered business entities, so it will come under RCM. It has to be paid by the registered business entities, not by Shanky Consultants. But this 2 crore turnover, should I include it in my turnover or will they include it? No, for them this is input, correct? Security services is output for me. I am giving the service. Shanky Consultants is giving the service. So even if the tax is paid in RCM by the other party, this will form a part of my aggregate turnover, not theirs. For them, this is input, correct? So for them, this will not be included in their aggregate turnover. Manpower services, FCM. Auditing services, FCM. So it will be 2 crore plus 1 crore plus 5 lakh. It will be 3 crores 5 lakh. Alright, that is your aggregate turnover. GST liable paid under reverse charge by Shanky Consultants. What is one thing that is paid under reverse charge? By Shanky Consultants. They are asking about Shanky Consultants paying RCM. Shanky Consultants paid sponsorship fees of 70,000 at seminar organized by Banarasi Das Private Limited in Delhi. For your Jan 2026 exam, there is an amendment. Okay, this amendment is very important. This has been this will be tested. I have a feeling this will definitely be tested. So please pay attention to this. This is your amendment. Yes, sponsorship service. They have given Shanky Consultants paid sponsorship fees to Banarasi Das Private Limited. So who is providing the service? Banarasi Das Private Limited, which is a body corporate. They are providing the service. Yes, they are providing the sponsorship service to Shanky Consultants. We are simply paying the fees to this guy. Yes. And category of supply of services provided by way of sponsorship to any body, corporate or partnership firm. Supplier has to be any person other than a body corporate. Now, Banarasidas Private Limited is a supplier. Yes. Are they a body corporate? They are a body corporate. Yes. So they will not be covered under RCM case. Here, recipient can be any body corporate or partnership firm. We are a partnership firm. So we are considered the recipient. But the supplier is not fulfilling the RCM condition. Yes. They are not other than a body corporate. So what we are going to see, this is not going to be covered under RCM. Rather, it will be paid by, sorry. Yeah, it will not be covered, so it will not be covered under RCM. Okay. Earlier in your answer, for this particular case study, they haven't changed the answer yet. They haven't given effect to the Jan 2026 amendment. So your answer will be wrong here. All right. So this will not be covered under RCM. Rather, this will go under FCM only. Okay. This will go under FCM only. So paid sponsorship fees of 70,000 means Shanky Consultants paid the fees. Who will pay the tax? Banarasidas Private Limited will pay the tax. This is not RCM. Shanky Consultant pays rent amounting to 6 lakh for a building owned by Municipal Corporation of Delhi. What about this? This is covered under RCM, okay? Because you are paying rent to a building that is owned by Municipal Corporation of Delhi. Yes, it's a local authority of the government. So it is covered under RCM. Because you are a registered partnership firm, you will pay the tax on behalf of them. So that is for 6 lakh. 6 lakh into what was the rate? Everything is taxable at 18%. So 9%, 9% is 54,000. Your correct answer is option C. 54,000. Alright, option C. State which of the following statement is true in respect of security services provided by Shanky Consultants to registered business entities. Okay. Security services RCM. Yes. Who will pay? The registered business entities will pay. Yes, that's what we saw. So what shall you issue? All right. What are the state what of which of the following statement is true? They're asking what is true. Let's read through the options. Shanky Consultants shall issue GST compliant tax invoice. Yes, because you are providing a service, obviously you'll issue an invoice. Shall issue bill of supply stating tax to be paid by service recipient under reverse charge? No. We never studied something like this. Yes. Shanky Consultants can issue any document in lieu of tax invoice? No. Obviously, it is covered under GST compliant tax invoice only. Shall issue receipt voucher every time it receives payment? No. For RCM, whoever is paying RCM will make a payment voucher. Yes, they will make a payment voucher when they are making a payment. Correct? The registered business entities will issue payment voucher. But Shanky Consultants shall issue GST compliant tax invoice. This is also a very important question in this case study. So we are done with case scenario number 23 also. Yes, and your answer for option, second question, here it will be A because the Jan 2026 amendment has not been given effect. So you will not be having the same answer. But the answer for us, it was only for 6 lakh into 9%, 54,000, 54,000. Now we are moving on to case scenario 24. I've marked it as important. Alright, so let's see what case scenario 24 is. Next, we move to case scenario number 24. So here PTL Private Limited, which is a body corporate, is a registered company. They have retail store of merchandise in 25 states. They have launched a scheme of buy one get one free. Okay, one shirt to be given free with the purchase of one shirt. Okay, so two shirts at the price of one. For saving cost, they have directly purchased merchandise from the manufacturers in the month of May. Okay, pay attention in questions where they have given for several months. Always pay attention to the activities in each month, because in your MCQ questions they will ask what is the outward supply for the month of May. But in a hurry, what you will do, you will calculate for May also, for June also, or you will calculate for the June activities, and then you will apply it for the question that asks for May. All right, so please read the question carefully, take your time to understand what they are asking, and then move forward. In a hurry, usually students tend to overlook this. All right, so please. In the month of May, to save employee costs, they purchased a tempo traveler worth 12 lakh with a seating capacity of 25% including driver for transportation of its employees. We all know ITC is not blocked if it is for the purpose of business and with a seating capacity of more than 13% including the driver. So here it is 25% transportation of employee. So you can take the ITC. PTL Private Limited voluntarily obtained the health insurance cover of each employee in the same month. You all know as per 17 subsection 5, blocked credit comes in where? When it is taken voluntarily. Yes, if it is not a part of statutory obligation, it is a blocked ITC. Here they have clearly given it is voluntarily obtained. Yes, it is clearly given it is voluntarily obtained. So this is blocked ITC. So how much ITC can you take? Tempo traveler is 12 lakh. They have given in the question that for intrastate supplies, it is 28% for tempo traveler purchase. So 14%, 14%, you will get. This is the ITC that you are eligible to take. This is blocked. All right. Then, in the month of July, Mr. Raghav, a customer of the company, filed a lawsuit in the court against the company for not supplying goods. Private Limited engaged Mr. Ram, an advocate, with a consideration of 25,000. So, Mr. Ram is an individual advocate. As per the terms of the contract, Mr. Ram issued an invoice on 5th July. However, consideration was not paid till February next year. Now, this line, however, consideration was not paid till February next year, is given simply to confuse you. All right. You all know, as soon as you see this, what will come to your mind? We did not pay the consideration within 180 days. Yes. So you have to reverse the ITC and you along with the interest, correct? But no. Why? Because Mr. Ram, an advocate, individual advocate, yes, and you are a business entity with an aggregate turnover exceeding the threshold limit in the preceding financial year. You're also in the taxable territory, yes. So this is a case of RCM, and 180 days payment condition is not applicable in two cases. One, when it comes to free supplies, and two, for supplies under RCM. Now, this is clearly a supply under RCM, yes. So, the fact that consideration was not paid till February next year is irrelevant to us. All right. Now, this is just the question they're asking. So the questions for this case study is, first question, with respect to buy one get one free, which of the following statement is true? If you read through the options, this is the correct answer. There are two individual supplies where a single price is charged for the entire supply. Their taxability will depend upon as to whether the supply is composite supply or mixed supply. All right. These are two individuals. Look at option C. Option A and option B is pretty much visible, I mean obvious in its incorrectness, because option A is it will not be considered as supply at all since no consideration is involved. Obviously consideration is involved. Supply of item for which consideration is charged is supply and the other item is free. No, it's both two things at the price of one. All right. These are two individual supplies where a single price is charged for the entire supply. Since a single price is charged, the same will always be taxed as mixed supply. Did we study something like that? No. Did we study anywhere that wherever a single price is charged, you will consider it as mixed supply? No. Yes, depending upon the case, depending upon the circumstances, we divide it as, we classify it as mixed supply or composite supply. So the most appropriate option here will be, these are two individual supplies, single price is charged, taxability will depend upon as to whether the supply is composite or mixed supply. Eligible input tax credit for the month of May. On the purchase of Tempo, we already calculated there 1,68,000, 1,68,000. And then on health insurance premium paid, it is blocked ITC, so nil. Which of the following statement is true in respect of the service of advocate availed? First one, payable by PTL Private Limited. That is correct, yes, because it is RCM. ITC availed thereon is to be added to its output tax liability with interest as consideration along with taxes not paid within 180 days of the issuance of invoice. We just saw that this condition is not applicable to RCM. So this is wrong. Here again, it is added to output tax liability, so wrong. Here, payable by PTL Private Limited, condition is does not apply. This is your correct answer. The last one are payable by RAM. The condition, sorry, it's given payable by RAM. So this is wrong. Okay. It is an RCM, so it will be paid by PTL Private Limited. That is all with your case scenario number 24. Now moving on to the next case scenario. Alright, so next is case scenario 25. Miss Neha is engaged in the supply of services. She is registered under GST, okay, supply of services, and has opted to pay tax under the composition scheme 10-2A. What is the rate for composition scheme 10-2A? It will be 6%, 3% plus 3%. Yes, because this is a service provider. The turnover for the quarter ending June was 12 lakh. So what will be your tax payable? 12 lakh into 3% into 3%, 36,000, 36,000. During July, this is the story of July. She crossed the aggregate turnover of 50 lakhs and opted out of composition scheme. She also started trading of goods in July. Now it is not just services, it includes goods also. She supplied an order to Breathe Well LLP on ex factory basis. What is ex factory basis? The supplier makes the goods available to you on the factory premises itself. Okay, supplier makes the goods available at the factory itself. That is called ex factory basis. Whenever you have ex factory basis mentioned in the question, outward freight, forget about it. All right, when you're calculating value of supply and in the question they have mentioned ex factory basis, please forget, please ignore outward freight. All right, so here basic price of the product is given 53,000. Outward freight is given. What did I say? You need to ignore it. Then you have packing charges 5,000. Packing charges is included because it is an incidental expense. All right, so 15 subsection 2 clause C will be covered here. Then discount given on receiving payment, which is 2,000, but pay attention, not included in the invoice, and there was not any agreement for the same. On receiving payment means it is a post supply discount. Yes, post supply discount should always be given in written agreement. Yes, it should be in an agreement. So not included in the invoice and there was not any agreement for the same. So you cannot consider this for your discount under section 15 subsection 3. Alright. So the only thing you will include is 53,000 and your packing charges of 5,000. So 58,000 will be your value of supply. For supplies provided to Breathe Well LLP, she received half of the amount in advance on 22nd July. This is goods, not services, correct? For goods, we have already seen when you're receiving something in advance, you're not going to take that as the time of supply. But for services, for the advance, you will consider that. The goods were dispatched from her factory on 25th July, delivered on 28th July. Raised the invoice on 30th July, balance payment also on 30th July. So what will be the time of supply? This is goods. Yes. This is FCM. Yes. For goods, if there is advance, will you consider it? You don't have to pay attention to it. But if the same thing instead of goods, if it was service, then for this advance, you will have to consider the time of supply separately. Now, date of invoice is 30th July. What is the due date for time of supply in case of goods? That too in FCM will be date of invoice or the due date of invoice, whichever is earlier. In time of supply chapter, always it is earlier. All right. So for time of supply for goods and on FCM basis, it is date of invoice or due date of invoice, whichever is earlier. Here date of invoice is given as 30th July. What is the due date of invoice? This is goods. There is movement. Yes. So for when it involves movement, the due date will be before or at the time of removal of goods. Here when is removed? Dispatched from her factory on 25th July. So 25th July or 30th July, whichever is earlier. So your time of supply will be 25th July. Miss Neha supplied goods to the following persons. Mr. Pavan, an unregistered person. Mr. Umesh, a registered person. Rains Trust, an unregistered entity, for the following value of supplies. None of the above persons require a tax invoice. Okay. When do you not have to issue a tax invoice? When the value is less than 200, If the value is exactly 200 also, you need an invoice. Values less than 200 plus they have to be unregistered plus they do not require the tax invoice. So this condition is satisfied, not require a tax invoice. Yes, the three of them don't need a tax invoice. Now we need to check if the value is less than 200 and if they are unregistered. Mr. Pavan is unregistered, value is 150. Does this fellow need invoice? No need. Okay, there is no need for invoice. So Mr. Umesh is a registered person. We said only for unregistered person. All the three conditions should be satisfied for you to not issue a tax invoice. Even if one is not satisfied, you need to issue a tax invoice. So here value is only 110, value is less than 200. The fellow does not require a tax invoice, okay. But he is registered. So definitely you need to issue a tax invoice. Rains Trust is an unregistered entity. Unregistered, not required. But what is the value? 250. It is 200 and above. Yeah, it is 250. So you need to issue tax invoice. These are the questions. Compute the tax liability for the quarter ending. I've already said 12. It was, what was the amount? We just saw in the beginning. 12 lakh into 3%, 3%. So 36,000, 36,000 is your answer. 36,000 each. Compute the value of supply made by Neha to Breathwell. We already saw that. Yes. You will only take your packing charges and you will take your base price. So answer is 58,000. We've already solved this. Determine the time of supply. We already said it was a date of invoice or the due date of invoice, whichever is earlier. So we came to the conclusion of 25th July. Miss Neha need not issue tax invoice to which of the following persons? We saw that two guys you need to issue invoice. For this guy you need to issue invoice because he's registered. This guy you need to issue invoice because the value is exceeding. Value is 200 and above. Therefore, only for Pavan you no need to issue tax invoice. Alright. Here the value was 53,000 plus 5,000, 58,000. Alright, so we are done with case scenario 25 also. Yeah, that is done. Now we move to the next case scenario number 26. Come to case scenario 26. Mr. Kumar started interior designing practice for the month of Jan. His turnover up to month of March was 1250. On 30th June, his turnover exceeded 20 lakh. We all know for services, the threshold for registration is 20 lakh. Did I say 20 lakh? Yes. On 30th June, his turnover exceeded 20 lakh and reached to 20 lakh 5,000. Mr. Kumar applied for GST registration on 15th July and registration certificate was issued to him on 25th July. So your first question is obviously your date of effective registration. So liable on 30th June. Within 30 days means he has to apply within 30th of July. When did he actually apply? 15th July. So within 30 days, yes, within 30 days he has applied. So the effective date of registration will be 30th June. Suppose if he had applied only on 15th August, then whichever is the date on which the registration certificate was granted will be the effective date of registration. On 16th July, he entered into a contract for designing the flat of Shah. Service was completed on 22nd July, issued invoice on the same day for 6 lakh. On 5th July, he purchased capital goods amounting to 4 lakh 50. From 25th to 31st July, he availed input services amounting to 1,75,000 in relation to an output service to be provided in the month of August. So when's your effective date of registration? 30th June, yes. Purchasing capital goods happened on 5th July, correct? So 4,50,000 ITC, I can take it. From 25th July to 31st July, I availed input services of 1,75,000. Can I take the ITC for this? Yes. Suppose you made a mistake in calculating effective date of registration here. If you had said incorrectly that the actual effective date of registration is 25th July, then you wouldn't have taken the ITC of 4,50,000. Yes, this is how ICI will trick you. All right. So if you are strong in your base concepts, then you can automatically be strong in your MCQs also. So here, since the effective date of registration is 30th June, 5th July, 25th July, 31st July, all these ITC you are eligible to take. Okay. So ITC of capital goods is 4,50,000. Input services is 1,75,000. They've given in the question that it is 9%. That is why I've computed for 9%. So CGST 56,250, SGST 56,250. Now, on 1st August, Mr. Kumar got another contract for interior designing from Mr. Ram. Hold on, please. Yes, from Mr. Ram, which he accepted on 2nd August. The service was completed on 6th August. Invoice was issued on 7th August. Payment was received on 29th August. What is the time of supply will be the question. This is forward charge. Yes, this is for services. When you are computing the time of supply for a forward charge transaction of services, first question you need to ask is, have they issued the invoice within 30 days? Yes, service was completed on when? 6th August. Have they issued within 30 days? What is the invoice issue date? 7th August. Yes, they have issued within 30 days. So what will be your date of invoice? It will either be the date of invoice or the date of payment, whichever is earlier. Date of invoice or date of payment, whichever is earlier. So what is date of invoice? 7th August. What is date of payment? 29th August. Which is earlier? 7th August is earlier. So 7th August will be your time. Effective date of registration 30th June. Option A. Can issue a revised tax invoice. Mr. Kumar can issue a revised tax invoice. For what are they asking the revised tax invoice? Look at this. On 16th July, he entered into a contract. The service was completed on 22nd July and issued the invoice on the same day for 6 lakh. All right. By that time, by 22nd July, he did not get his registration certificate. Yes. So he issue a revised tax invoice is what they are asking in the second question. When can you issue a revised tax invoice? Within 1 month of the grant of registration. When did you get your registration certificate? On 25th July. Plus 1 month means 25th August. So up to 25th August, Mr. Kumar can issue a revised tax invoice. Alright. Eligible ITC we calculated 56,250, 56,250. The time of supply provided by Mr. Kumar to Mr. Ram is 7th August. We just concluded it at the end. Yes, we just concluded it at the end. 7th August. 7th August. One more questions left. What will be the tax liability of July month if Mr. Kumar is paying tax under section 10(2)(a)? What is 10(2)(a)? Service providers? Yes, it will be 3% plus 3%, which is total of 6%. Yes. What is the total? July month turnover was 6 lakh. So 6 lakh into 3% into 3%, 18,000, 18,000. All right. Right. Was July month 6 lakh? Hold on. On 16th July, he entered into a contract and the issued invoice on the same day for 6 lakh. That's all. This is all inputs. This is the only outward supply. The other one is on 1st August. So 16th July, the only turnover for you is 6 lakh. All right. So we are done with case scenario number 26, was it? Yes, case scenario number 26 is done. Now 27. So next is case scenario 27. Vishali and Co., a partnership firm, is engaged in the manufacturing of equipments. Okay, manufacturing is important, partnership firm is important. In Kerala, the firm became liable for registration 10 July, applied on 10th August, granted registration certificate by 14th August. The firm opted for monthly return filing. Now, liable became liable on 10th July. Yes, but applying within 30 days means you have to apply within August 9. All right, because July has another 21 days left. Yes, plus another 9 days is 30 days, correct? So 9 days means it is on August 9. Within August 9, they should have applied for the registration, then they would have fell within the 30-day limit, but actually they applied only on August 10. So when is the date of certificate? It is on 14th August. So date of effective registration also will be 14th August. If they had applied within August 9, then it would have been 10th July, but here since it is on August 10, 14th August will be your answer. The firm receives sponsorship services from Leisure Treat Bay Private Limited for a business expo conducted by such company. For sponsorship service, there is an important 2026 amendment. This is your amendment. We have already seen this before. Serial number 4. Okay. Services provided by way of sponsorship to any body corporate or partnership firm. Obviously, Vaishali and Co. is a partnership firm, so yes. Supplier, any person other than a body corporate. Who is a supplier here? Here the supplier is Leisure Treat Bay Private Limited, which is a body corporate. Yes. So it will not come under RCM, rather it will go under FCM. Okay. Who will pay the tax for this? We receive sponsorship services from Leisure Treat Bay Private Limited. So Leisure Treat Bay Private Limited will pay the tax under FCM. Okay, will collect from the firm and they will pay the tax to the government under FCM. No RCM here. Okay. But in the solutions for this particular case scenario, they would have taken this under RCM because they have not given the 2026 amendment effect. Okay. Then Safe Logistics, GTA, which charged 6% for each CGST and SGST for their services. If GTA is charging forward charge at 6%, then it is under FCM only. You don't have to bring it into RCM. It also receives security services from Prompt Security Agency Private Limited. When is it under RCM? When is security services covered under RCM? When you're receiving the service from other than a body corporate, correct? Here, it is Prompt Security Agency Private Limited. It is a body corporate supplier. So, it is not covered under RCM, rather it comes under FCM. The firm had opted for composition levy and its turnover. Composition levy, and they are a manufacturer, correct? This is why this manufacturing point was important here, okay? And its turnover for the quarter ending September was 14 lakhs, out of which taxable supply amounted to 10 lakh, exempt supply amounted to 4 lakh. The firm made a supply of equipment to an unrelated limited company in the month of October with a market value of 12 lakh, wholesale value of 13 lakh, maximum retail price of 14 lakh. However, the transaction was made at 11 lakh, which was the only consideration. Okay, so this part is important because very unusual question. Okay, they have already given that it is not a related party, correct? And here, which was the only consideration. The transaction was made at 11 lakh, which was the only consideration. So price is the only sole consideration. Yes. So we've already seen if the transaction takes place between unrelated parties and if price is the sole consideration, whatever is the actual amount paid or payable will be your value of supply. So here, what is the actual amount paid? 11 lakh. So 11 lakh is your value of supply. Oh, I didn't finish composition levy. Sorry. Its turnover for the quarter ending September was 14 lakh, out of which taxable supply is 10 lakh. Exempt supply amounted to 4 lakh. For manufacturers, it is 0.5%. Yes, 0.5%, 0.5%, 1% in total. So for quarter ending September, total is 14 lakh into 0.5%, which is 7,000 each. CGST 7,000, SGST 7,000. Here, one important mistake that a lot of people will make is they will just take the 10 lakh and calculate 0.5%. No. Okay, it will be on the total turnover, 14 lakh. Then the firm belatedly paid the tax amounting to 40,000 by debiting the electronic cash ledger for the month of December on 9th February. Okay. They are paying under composition scheme. Okay. Keep this in mind. A lot of you, as soon as you see this, you will think, oh, for December we will take Jan 20. From then we'll start calculating the interest. No. This is composition levy. So for composition levy, this is the December quarter. CMP 08 will be filed on 18th of the month succeeding the quarter. Correct? So that will be 18th of Jan. So how many days are left in Jan? Up to 9th February. Correct? How many days are left in Jan? 13 days are left in Jan plus another 9 days. On February 9th, we have already, wait, so 13 plus 9 is 22 days. So 40,000 into interest rate is 18%. Okay, 40,000 into 18% into 22 days divided by 365. Your interest will be 434. So effective date of registration, we've seen it will be 14th August, the date of grant of certificate of registration, because they did not apply within 30 days. Amongst the service availed, which of the following is coming under reverse charge mechanism? As per your case scenario booklet, they haven't changed for the Jan 2026 amendment. Actual answer is none of the above. All FCM. Okay, even sponsorship service also FCM. Because it was given by a body corporate. Determine the value of supply of equipments under 15 subsection 1 in the month of October. We already said it was the amount paid or actually payable, because price is a sole consideration. It is between unrelated party. So it was 11 lakh. Compute the tax payable for the quarter ending September. We already saw that. Yes. 14 lakh into 0.5% each. 7,000 each. Compute the interest payable, we just calculated at the end, which is 434. By that, we come to the conclusion of case scenario number 27, I hope. Yes. Now we move on to the next case scenario. So next is case scenario 28. Mr. Pashupati, registered taxpayer under GST in the state of Karnataka, is engaged in trading of various type of consumer goods. He is a trader of goods. His turnover in the preceding financial year was below the threshold limit, so he was eligible for exemption in the preceding year. He received goods on 1st May that are liable to tax under reverse charge. Invoice was issued on 5th May. Alright. And payment for the same was made on 6th June, entered in the books of accounts on same day, and debited in the bank account on 7th June. Okay, 1st May, 5th May, 6th June, 7th June. So when we are determining time of supply, this is goods and this is RCM. It will be earliest of three things: your date of payment, your date of goods received, and 31st day from the date of invoice. Three things. All right. Date of 31st day from the date of invoice, date of goods received, and date of payment. Okay. Here, date of payment will be again earlier of whenever it is recorded in the books of accounts or debited in the bank account. So, date of goods received is 1st May. Books of account payment received is 6th June. Bank account debit is 7th June. So, date of payment will be 6th June. 31st day from date of invoice. How will you calculate it? 5th May is your date of invoice. Yes, they've given here. It's on 5th May. 5th May is your date of invoice. 30 days from 5th May means 26 days left in May. Yes, for May 31st, you have 26 days. And 4 days in June, which is 30 days. So June 4 is when your 30 days will lapse. Okay. 31st day from the date of invoice is what we will see. So 31st day will be June 5. Okay. What is the earliest now? 1st May, 6th June, or June 5? Obviously 1st May. So your time of supply will be 1st May. Then he got an order from Ravi and Co. of Punjab with an instruction to dispatch the goods to Kumar and Co. of Tamil Nadu. This is clearly bill to ship to model. In bill to ship to model, as per section 10 subsection 1 clause B, it will be the principal place of supply. Correct? Here, who gave the order? Ravi and Co. of Punjab. Correct? And on his instruction, he is the principal person. Correct? Based on his instruction, we are dispatching it to Kumar and Co. of Tamil Nadu. So, where is the actual place of supply? Ravi and Co. Punjab. He had sourced the goods from Lal and Co. of Kerala. That is irrelevant to us. Yes. He paid repair expenses for trucks used for transportation of goods of his business. This is for business purpose and it's repairs only. So, no problem. The GST component involved was 13,000. See, they have said GST component, not the value of supply. Okay, GST component is 13,000. Can I take ITC? I can. Yes, because it is repair expenses. Moreover, it is used for business. He arranged for catering for his workers on Labor Day function and paid bill. Obviously not, it's blocked credit. Yes, 17 subsection 5. He received the first lot of certain goods having GST component of 25,000. When goods are received in lots, when can you take the ITC? When you, upon receipt of the last lot, correct? This is the first lot, yes. So can I take 25,000 GST ITC? No. So how much can I take? Only this 13,000 I can take, because 15,000, 17 subsection 5 it is blocked, and goods in goods in lots, only upon last lot I can take it. So totally only 13,000 GST component I can take ITC. Time of supply of goods received by Pashupati, we already found it. It was 1st May. What next? Compute the amount of input tax credit. Yes, 13,000. Place of supply for delivery of goods placed by Ravi and Co. Ravi and Co was in Punjab. It was built to ship to model. Correct? So it was Punjab. That is all with case scenario 28. Very simple case scenario. Alright. Next is case scenario number 29. Next case scenario 29. Mr. Rajiv Sharma, a regular GST registered supplier in Jaipur, Rajasthan, provides the following details. He received an order from Velocity Limited, body corporate, of Jodhpur, Rajasthan for a taxable supply of goods worth 2,50,000 on 15th November 2024 and received payment on 18th November 2024. The goods were supplied on 22nd November. Invoice was issued on 23rd November. This is obviously for time of supply. Let's break down the information. Okay. This is goods. This is FCM. Correct. What will be your date of, what will be your time of supply? It will be the earlier of your date of invoice or the due date of invoice under section 31, whichever is earlier. Now this is goods. It involves movement of goods. So due date of invoice under section 31 will be before or at the time of removal of goods. So removal of goods will be whenever it was dispatched. Where is it given? Were supplied on 22nd November. So 22nd November is your due date of invoice under section 31. What is your actual date of invoice? Invoice was issued on 23rd November 2024, so 23rd November, whichever is earlier. So what is your time of supply? 22nd November. Alright. He deals in laptops and related accessories. He sold a laptop along with a lap desk for a single price of 1,25,000. Is this a mixed supply or a composite supply? Composite supply is naturally bundled. So when you buy laptop, do they give lap desks usually? Is it a common practice? No, of course not. Okay, so this is a mixed supply. In mixed supply, what is your rate of tax that is applicable? The highest rate of tax will be applicable. If it was composite supply, it will be whichever is the principal. The rate of tax of the principal supply will be applicable. Here, since it is mixed supply, whichever is the highest rate will be applicable. They've given laptop is 18%, lap desk is 12%. So obviously it will be 18% will be applicable. This is from Gujarat. Alright, so this will be, we are in Rajasthan. He sold a laptop to Gujarat. So this will be interstate. So IGST will be applicable 18%. That's how they calculated this. 1,25,000 into 18% is 22,500. Similarly, for the first part, we are in Rajasthan. We received an order also from Rajasthan. We are giving to, it's intrastate only. Okay, it's intrastate. So intrastate will be 2.5%, 2.5% on 2,50,000. All right, 6250, 6250. Perfect. Now we're coming to the next. He purchased raw materials worth 75,000 for business use from Orion Industries, a registered supplier in Bengaluru, Karnataka. This is interstate. Yes, because we are in Rajasthan, this is in Karnataka. On 10th November, however, he consumed raw materials worth 10,000 for his personal use. For personal use, if you take, can you take the ITC? Obviously not. Okay. So out of the 75,000, for 10,000, you will not take the ITC. Alright. Eligible ITC 75,000, but out of that only for 65,000 you will take the ITC. Alright. What you will naturally do is you will initially take the ITC for 75,000. And then when you're using it for personal use, you will reverse the ITC you took on 10,000. Okay. So in effect, you're only taking the ITC on 65,000. Okay. Only on this value you're taking the ITC. 65,000 into 5%. Because it is interstate. He has paid 1 lakh on 20th November 2024 for membership in a club located in Rajasthan availed for employees. not obligatory under any law. If there is no statutory obligation, it is blocked credit under section 17 subsection 5. The time of supply of goods supplied to Velocity Limited is, we just found this, no? 22nd November. Earlier of this is 22nd November. What do we have next? GST payable on outward supply for the month of November 2024. For the month of November 2024. What are the things that you did in November? Outward supply is what they're asking. This is all in November? Yeah, this is also in November. So 6250, 6250. What is another outward supply? Your laptop. 22,500 IGST. This is all input. Okay, 22,500 IGST and 6250 CGST, 6250 SGST is your answer. 22,500, 6250, 6250. Amount of total eligible input tax credit for the month of November. Pay attention to this. GST payable on outward supply. If they had asked you what is the net GST payable for the month of November 2024, then what will you have done? You would have calculated this outward supply. You would have reduced the ITC for the month of November, and whatever you pay in cash, only that you will show. Okay, they will either give it us net GST payable, or it will be given as net GST payable will be given. Next is amount of total eligible input tax credit for the month of November 2024. We already saw two things were blocked. Yes, personal use was blocked and membership was blocked. So only on 65,000 into 5%, 3250. All right, 3250 IGST. That's all. Case scenario 29. Was it 29 or 28? Case scenario 29 is also over. Now we move to case scenario 30, the last one. Alright. Bright Star Private Limited, a regular GST registered supplier of both taxable and exempted goods. Okay, taxable and exempted goods, is located in Shimla, Himachal Pradesh. The company provides the following details. The aggregate turnover, all intrastate, everything is intrastate, they are only intrastate, of goods exceeded 20 lakh on 29th July 2024 and 40 lakh on 16th August 2024. What is your threshold limit when it is only intrastate goods? 40 lakhs is your limit, yes. Plus this is in Himachal Pradesh. So limit is 40 lakhs only. So when is the limit crossed? On 16th August 2024. Yes. It submitted the application on 30th August. Within 30 days from 16th August, they should have applied for the registration. They have applied for the registration. So effective date of registration will be 16th August only. Okay, 30 days means 15th September, but they have applied it on 16th August. It's not 16th August, 30th August itself. So your effective date of registration is 16th August. It also entered into a contract with Zenith Limited, body corporate, of Manali, Himachal Pradesh on 10th September 2024 for the supply of taxable goods worth 15 lakh. The payment for the same was received on 12th September 2024. The goods were scheduled for delivery on 25th September, removed from the factory 24th September. Now here we're going to see the due date of invoice under section 31 and the time of supply also. I think the question was only on due date of invoice under section 31. The payment was received on 12th September. See, this is movement of goods, correct? This is under FCM only. This is for goods. So what will be your time of supply? Either date of invoice or due date of invoice under section 31, whichever is earlier. Yes, whichever is earlier. What is the date of invoice? Date of invoice is, have they given it? They haven't given the date of invoice. Entered into a contract payment was received, scheduled for delivery, removed from factory. So they haven't given your date of invoice, but the due date of invoice under section 31 will be before or at the time of removal. Removed from factory on 24th September. So 24th September is your due date of invoice under section 31. It has opted monthly filing of 3B return and filed 3B return for the month of September on 19th December. When should you file your September return 3B? 20th of October, correct? September 3B should be filed within 20th of October. But they filed it on 19th December, correct? So what will be the interest? October 20 is the due date, yes. So after 20 you have to count. So October 21, so from October 21 to October 31 there are 11 days. Then we have October, then November. November you have 30 days. When did you file this on? December 19. So December has 19 days. 11, 30 and 19 days, totally 60 days. Okay. So it will be 56,000 is the payable in cash. Okay, net GST payable in cash is 56,000. 56,000 into what is the rate of interest? 18%. 56,000 into 18% into 60 divided by 365. 1657 is your interest. Effective date of registration, we just saw it recently because 16th August 2024. B. The date by which an invoice must be issued to Zenith Limited. That is, they are asking what is the due date of invoice under section 31. Okay. We saw that the date of removal, correct? 24th September. The amount of interest payable for delay, we just calculated it, correct? 1657. That brings us to the end of your case scenario booklet. So by this, we come to the end of our booklet on case scenarios for your Jan 2026 attempt. I know we have very little days left for the exams. I know you all are working hard. Keep working hard. It's only going to be a little more time. I know you're not able to see a lot of results immediately. I mean, you're studying today, and at the end of the day, it still feels like you have a lot to cover. But that is how it is for everybody. The only thing you need to do is keep showing up. Keep studying consistently until the day of the exam. Be confident, be positive, keep showing up no matter what the circumstances. I really, really hope you enjoyed this session. I really hope it was useful and you were able to revise a lot of concepts by going through this case scenario booklet. See you with the next video. Bye, everybody.